Good afternoon, traders. John Caruso coming to you here for February 2nd with your currency outlook for today. First, we'll start off just looking at global equities. Everything's lower. The fear trade is still very much on at the moment. We got the S&P here down 1.5%, trading right around 1905. The Dow down 1.5%, trading right around 16,001. Japanese Nikkei as well down 1.5%. So as I mentioned before, the fear trade is still very much on. If you look at the 10-year yield, we are trading at 1.88. Okay, that's the lowest level we've seen in about a year for that market. Gold, if you take a look at gold in January, we're at $57 in January. So the fear trade is very much on. Safe havens are still firing higher. We're going to kick it off a little differently today. We're going to look at the Japanese yen first, trading right around 83.16. That is up 55.5 points on the day. However, last week the big news was Kuroda and the Bank of Japan did move interest rates to negative. Okay, so if you haven't caught on by now, we're dealing with very centrally planned markets. Okay, so it seems as if anytime a central banker comes out and speaks from any country, that respective country's currency burns. Okay, the name of the game is still economic stimulus. It's been happening now for several years. So we're very much in a currency war globally. We'll take a look, even so, we'll look back 2 weeks ago at Mario Draghi. Mario Draghi came out and gave one of his, we're going to do whatever it takes to save the Eurozone speeches. What happened? The Euro currency dropped over 100 points within that session. So we are dealing with a little bit of a currency war here around the globe. The next central bank, obviously, to keep your ear to the ground for is the United States. Will the United States continue its aggressive path with interest rate hikes moving forward this year, or are they going to start walking back their steps from the December hike and start moving dovish? That is the key. Right now, the euro trading 109.20, up 15.5 points. Clear rejection this morning of a regression line. All in all, we are basically range bound. Okay, you might see that trade break out of its range with the unemployment numbers coming out on Friday here in the United States. So that's something to look forward to. Looking at the dollar, trading 98.92, extending its losses for the week right now, down 80 points. However, I still think you very much have to stay on the long side of the U.S. dollar until we do hear from the Fed circling back around and moving back towards a dovish stance. Yesterday, we actually did hear from Fed Vice Chairman Stanley Fischer. One of the key points from that speech, he did mention that 4 rate hikes, because the Feds back in December projected 4 interest rate hikes for this year. He mentioned this. He said 4 interest rate hikes was among the numbers discussed by the Federal Reserve, but not the only number discussed. So I'm kind of taking that as the Fed is starting to plant the seeds to perhaps walk back their hawkish stance on interest rates and perhaps move back towards a dovish stance come the spring. So that's something to keep your ear to the ground for. We do hear from Janet Yellen next Wednesday, so that could further drive home that point that the Feds could be moving back towards a dovish stance. So that's all I have for you today. Feel free to call me anytime, 800-669-5354. Good luck. Futures and options on futures may involve substantial risk. It may not be suitable for all investors.